Hey guys, this is Kartika Kantwal from Apex FinServe, and well, it's the weekend, so we are back with something new for you guys. Now, we are not, carrying on the interview series every weekend because, well, I figured that might be getting a bit, lengthy for you guys to see or a bit boring for you guys to see. So now, I have this thought with me that I might as well share some new experiment or some new trading setup with you guys every couple of weeks, whatever that I am working on. Now I do have something like that today as well. So we are going to be looking at a strategy, a technical, chart setup today. Now the idea behind this strategy is that it's supposed to be strongly trend following. So as such, it is going to work very well with trend following assets or trend following chart types such as Bank Nifty, GBP INR, and those mid cap volatile stocks which pick a direction and then they keep strongly moving in that said direction. Now this is a rule driven system. This is not something where subjectivity is going to help you. So you don't need to be very good with price action to follow this. So if you want something that you can refine upon, if you want something that you can work upon and experiment and tweak as per your liking, you can take this rule set as a base and then work your way around until you have a complete system built as per your risk appetite or as per your market expectations. Now within this setup, we are going to be using three indicators. As I always say, if you might have heard from me, every indicator on your chart needs to be attending to an issue. There needs to be some question that it's answering from your chart. Don't just put an indicator because it looks good. So यहाँ पे we are going to be using a combination of moving averages, VWAP, as well as the ATR. Now the moving averages, we are going to be using them for identifying our bias since it is a trend following strategy. We are going to be using them to identify our bias, which direction to take a trade in. The reason why we are using moving averages in this point here is because, well, it's an overlay indicator. It more or less simplifies the phase analysis part. If you're not good with the price action method of phase analysis or structure analysis, which I did cover previously, but if you are not good with it, then well, this is a shortcut route to that very phase analysis. Now we are going to be using exponential moving averages. Again, the reason why exponential is, well, they are fast moving averages. They can give you immediate market trend identification, which is what we are looking for, specifically while talking about intraday trades. Now after the moving averages, we have VWAP. Now VWAP is going to be the immediate signal trigger candle, or the trigger generator. The direction is going to be governed by the moving averages, the slope, and the crossovers. The trigger generator is going to be the VWAP, which signifies a small shift in momentum on the desired side of things. Then the last thing that we have is going to be the ATR. Now the ATR is going to be used for your target and your stop loss settings. The target and stop loss settings, they can be done manually as well. You might be aware of, not aware, but rather many people do this. They have a fixed preset percentage value of target and stop loss. I do that too, most of the times I work around like that. But with this setup, the thought process is slightly different because the direction of the trend, not the direction, but rather the momentum or the strength of that trend is varying depending on the kind of volume that is at play. So what ATR is going to be doing here on our setup is, well, it's going to give you very clear expectations depending on what the range of the candles has been. So if the ATR values are quite high, you can expect bigger targets. If the ATR values are quite low or it is sinking down, you can expect a constricted range bound candle formation, and as a result you can go for smaller targets. Now if you want the rule set, then well, it has been on the screen all this time. You can directly pick that up and paste it. It is also going to be there in the description below. Now without wasting further time, let's move on to the charts. Now on the charts, we are going to be discussing two things. As I said, I have practiced this on Bank Nifty and GBP INR, and well, it is working quite well over there. So if you want, you can practice that on further different chart types. As I said, the volatile ones, the mid caps, which pick a direction and then move strongly in that direction. You can experiment or backtest this there as well. But for me personally, I prefer to use it just on these two things, Bank Nifty and GBP INR. Now on our chart, we have the moving averages, which is 9 and 26 exponential moving averages. 9 being your very fast exponential, it is going to more or less stick to the candlesticks. 26 being your general trend identification. You can use that slope of it to gauge the strength of the trend or the strength of the crossover. Then the thick blue line that we have on the chart is the VWAP or volume weighted average price. You might be well aware of that. However, if you do want a separate video on the interpretation of VWAP, a small video on that, let me know in the comments below. I'll try to make one for VWAP as well, a separate one. Now on the bottom we have the ATR, which we are going to be using for, as I said, placing our targets and stop loss expectations. Now the first thing that we do on this setup is, well, obviously look at the crossovers, because that is going to signify the direction. Now talking about Bank Nifty, well, it has been severely in an uptrend since the 21st of August. Now if you might be aware, I ask you guys not to go short on Bank Nifty. This was one of the reasons I have been following this setup since almost 2 or 3 months now, and it has been working great. The crossovers are pretty strong in nature. So we had a healthy crossover, and since then for a couple of days we didn't have a candle close under the larger moving average that we have, even on a 15 minutes time frame, which signifies that the movement was pretty strong and it was likely to be sustained. Now coming to the chart setup and talking about the entry triggers, the first thing that we have to do is, as I said, look for crossovers. Now this was the first crossover, if you can see on the chart, that was the golden crossover or the bullish crossover, as you might be aware of. Now the crossover signifies your direction, so until and unless you have a death cross happening or a bearish crossover happening, you are not going to be taking short entries. You are only going to be going for long entries at this point. Now talking about the recent triggers or the recent entry candles on BNF, talking about yesterday or the 28th. Now if I were to as per the rules of this system, we are only going to be taking long entries. Now the first candle is to be avoided, because that is where the opening volatility kicks in, the 9:15 to 9:30 candle. I don't like accepting that as my signal candle. The second candle, however, that can be a signal candle. Now for long positions, the criteria is that, well, you should have a candle that is closing above VWAP, and the subsequent candle should break the closing price of, or the high break or the close break, depending on your how aggressive or how conservative you are, of your signal candle. So it is more or less a 2 candle confirmation, with your first closing the 9:30 candle in this case being your signal candle, and the subsequent candle 9:45 candle breaking the high of that candle. So generally I prefer to take entries when the signal candle's high is being broken. In this case 23,890, as soon as that was taken out, I did take a long entry, and I would have taken that long entry too once again. So if I were to plot a position at this point, then I would have my entry point at this. Now for target and stop loss placement, there are 2 methods. You can calculate it directly from your point of entry. That is the first one. That is very, very simple and straightforward. The only help that we'll be taking at this point is from the ATR. Now if I look at the ATR values at my signal candle, they come out to be at close to 67-70 points. So that is going to be my primary target. So 70 points is the first target. If I place it down, then well, yeah, that becomes my first target. The stop loss is calculated from my entry candle's low, added 70 points to that, it gets me close to 90 points. So yeah, the RR is slightly inverted, but the thing is, since it's trend following in nature, you can trail it as per your liking. There are methods to trail it as well. You can either trail it onto the shorter moving average, that is the 9 EMA, or you can trail it just under the VWAP or every other candle close too. I don't like trailing it. I simply book at the first one. I prefer regularity. I prefer a higher hit rate than a lucrative risk reward, because, well, I aim for consistency. But that's just my taste. You do not need to do exactly the same. There are 2 methods, as I said: book at the first target, or trail it as per the value of the 9 EMA, or as per the value of the VWAP. Once your first target is met, then of course the second idea is to trail your stop loss to entry point. Then again 2x of your first target is met, trail it to the VWAP or the 9 EMA period. For example, you have 70 points target here, second becomes 140, and then 3 into 70 and so on. Trailing, or whether to trail or not, is not something that I can really, talk much about, because I do not like to trail. That is my personal taste. You can follow that or not, that's up to you. Now moving on to the second chart. Now there's one thing that's there on this strategy, that's once you have a big gap, or a gap up or a gap down, I don't really prefer to take an entry in the direction of the gap, because you might have heard me say in a lot of videos that I do not really trust the gap based price if it's a resistance break or a zone break or anything. Because if you look at the nature of the gap at this point, then well, simply at the opening candle there has been a massive change in the steepness of the slope of the moving averages. Now if I were to look at this close to the close of the previous day on GBP INR, then well, there was supposed to be a death crossover at this point or a bearish crossover, but the markets closed. So if there was a flat opening, we might have had a crossover in the coming session. So at that point, if if I do have a long signal coming over at this point, I am most probably not going to take it, simply because well, it is pretty obvious. If you have a gap up that is in excess of 1400 1500 pips, I don't think that's likely to be sustained. I would like to bet more that the gap is being filled rather than it being continuously heading in the same direction. Now moving on to the actual signals on GBP INR. If you again of course, the first thing is we try to identify crossovers whenever we have them. Then the next crossover that we had was at this point. I hope you are able to see the color is merging with VWAP, but I hope that it is apparent enough. Now then of course, that is a golden crossover. You can see that the 9 EMA is under the 26 EMA, so that is a bearish bias signal. Now in this case, we would have preferred to take, not preferred, the system says that we will take short entries only and not long entries. Now here the signal candle becomes the 1045 candle, because that is the first candle that closed under the VWAP. Once that low is being taken out, you can take a short position at that very point. For if I were to plot a short position here, it would be, this would be my entry point. My target placement would have been about 1400 pips. That is, yep, it says 1475, rounding it up to 1400, and my stop loss would have been the open, it would have been close to 1700 or 1900 pips. Yeah, so the RR is 1:0.75. It is again inverse RR, but as I said, I like to bet more on the consistent hit rate. Now there are multiple experiments of this system, or the multiple variations that you can try for yourself. The simplest one is as I said, you can experiment from where your stop loss and target values are to be calculated. You can take them from the high or low of the candle values or from your entry prices. That is completely up to you. There are also other things that you can try out, such as you can try with different time frames. I prefer to use 15 minutes because I think that is a balanced time frame. You can also combine various price action concepts with this setup, such as your Fibonacci retracements, demand supply zones, chart patterns, anything, just to cement the bias that you are getting from the exponential moving average crossover. There are even more parameters that you can adjust. You can also go with multiple entries in a day or with fixed number of entries in a day. I prefer to take just one entry a day, and I generally prefer also to go for fresh crossovers that are not being carried from a long period. For example, if I have a crossover that is more than a week old, or 7 to 8 trading sessions old, then well, honestly, I would not really trust that crossover by itself, unless of course I have strong phase analysis confirmation at that point. If that is there, then well, there's no issue. The more the merrier. As many triggers I'll get, I'll trade. So this is the setup that I had to discuss with you guys for today. Now I have a plan to bring new setups or new trade ideas frequently to you guys. Do you like such kind of series, or do you like such kind of videos? If you do, then let me know in the comments below, because I have a lot of things, a lot of experiments that I keep on performing. I play around with the indicators, with the price action concepts a lot. I try to come up with as many setups, as many efficient and working setups, not just setups, as I can. So if you want more of these videos, let me know in the comments below, and well, we can start a separate weekly series on this one too. I can bring different trading ideas to you every day. If you want more of such, as I said, let me know in the comments below. Thank you so much for watching, guys. If you like this content, if you like this new idea of mine too, then don't forget to like, share, subscribe, and press that bell notification icon too. Have a wonderful weekend. Bye.